Hi, good afternoon. And today I'm joined by my colleague Anita Bed to talk about the master directions on fraud risk management issued by the RBI, specifically for non-banking finance companies and housing finance companies, dated 15th of July this year. On the same day, separate master directions were issued for banks and for certain cooperative banks as well. So Anita, I think the first question that we get started with is what was the trigger that prompted the RBI to issue a fresh set of master directions, replacing the earlier one? What exactly is what was the inspiration?
Right, sir. So I think classification of fraudulent borrowers was already regulated by the RBI. There were master directions that were there in place for NBFCs. However, the practice of reporting, identifying, and then maybe classifying a borrower as fraudulent, that was varied. It was maybe the practice was dependent more on the specific policies that the NBFCs were adopting. And that is the reason there were various you can say objections or because the practices were varied, there were instances wherein people, the NBFCs or the lenders, were actually not following the process of treating the customers fairly or providing them the opportunity of being heard. There were rulings on this, and a specific Supreme Court ruling in the case of State Bank of India versus Rajesh Agarwal. Therein, there was emphasis was laid that natural justice, the principles of natural justice, should be considered while declaring any account as fraudulent. And this was actually the trigger point which led to the issuance of the new master directions.
So you're basically saying that tagging someone or naming someone as a fraudulent borrower has huge implications on the said borrower. When the borrower is deprived of funding from the entire financial system, he's tagged as a fraudulent borrower by SEBI as well. There are several barriers. There's probably also initiation of criminal action. So before such a severe step is taken, the person who is intended to be tagged as a fraudulent borrower must be given a reasonable opportunity, because it might sometimes be that I might just be taking a unilateral action. It might have a severe consequence for the borrower in question. Therefore, this is quite understandable, and the Honorable Supreme Court therefore did say that you're taking such a stern and such a kind of colossal action against a person. Justice demands that you must give him his own right of representation as well. But tell me, what purpose is served with the filing of information of fraudulent borrowers? The RBI is probably envisaging some kind of a central pooling of information about fraudsters. So, what purpose is being served there? I've
So this
suffered money because I've lost money by way of fraud. On top of that, I'm also saddled with regulatory compliance of reporting a fraud. So, in what way you're probably burdening a person who already has lost money? If there's a robbery in my house, well, I normally go and report to the police, but no regulation comes and says that if I don't report to the police, I'm probably doing something wrong. So, why isn't somewhat similar here? What is the central theme of reporting fraudulent borrowers?
So, as lenders, being part of the financial sector, we are dealing with borrowers. I would say fraud, if the borrower has been classified or declared as fraud, we know that there are various implications on the person, one of which includes that I cannot be lending to such borrower. This becomes a part of my credit evaluation or credit assessment. Now, for other lenders, it becomes important that I should also know that I'm not lending to such a borrower. For myself as well, I should not be, because if I have reported someone as fraud, I'll take the measures. I'll ensure that yes, I'm not extending any other loan transaction to the same person. However, what happens to other lending institutions? For them, it is important that we are reporting to the regulator, and there is a common list wherein the names of these fraudulent borrowers will be appearing, and we can do a check while extending any loan to a borrower that the person is not falling in that list.
So you're actually not helping yourself because you already have burnt your fingers. You're actually trying to save the entire system, because this person who has caused damage to you should not now go ahead and cause damage to others. That's the idea. Absolutely appreciated. Now, in terms of scope of applicability of the master directions, Anita, from two perspectives. Number one, which all entities, which all lenders are covered. Number two, what kind of frauds are we talking about here? First, the entities and then the types of frauds.
Okay, so the RBI has issued three separate master directions. If we see, first, for commercial banks, there is a separate master direction. For cooperative banks, there is a separate master direction. The third and important, our focus area, is the master directions for NBFCs. Now, in NBFCs also, who all are covered? It is base layer NBFCs having an asset size of more than 500 crores that are getting covered. Middle layer NBFCs, HFCs directly are classified as middle layer, so they are also included over there. And third is the upper layer entities. Next, coming to the question of what kind of frauds are getting covered over here. So all frauds, primary focus would be frauds that are caused in borrower account, even non-credit accounts such as investments that we do. These are also, there are early warning signals for such accounts as well. And frauds for any co-lending or investment, these kind of transactions, all these will be covered. Also, staff accountability has been something that the RBI has mentioned, which was there earlier as well. So if any of my employees are involved in the fraud, then that is also has to be factored in.
Any of the employees are involved in a fraud done by the borrower or the fraud done by employees themselves. My
Could
employee,
be
for
both.
example, is cheated. Irrespective of borrower, my employee cheated the company. In that case, also are the directions applicable?
I would not say that these directions specifically will be applicable because that will come from the HR policy or the separate policies. However, the directions may make a reference to the HR policy, or maybe there can be separate regulations. When we adopt a policy which is specifically for fraud risk management, there can be a separate section dealing with employee frauds and staff accountability in case the staff was involved in the fraud that was committed by the borrower. That will be covered under the purview of this direction.
So you're saying basically the primary focus is, because after all you are lenders and therefore primary focus is frauds done by borrowers. When would you say borrower has committed a fraud? Merely because the borrower is turned into a defaulter, was he a fraudster? What's the difference between defaulting borrower and a fraudulent borrower? How do you learn that? How do you draw the line of distinction? When does a pure inability to pay become a case of fraud? For example,
Okay.
let's say willful defaulter is the same as the fraudster. Unwilling defaulter meaning willing to pay but not having ability to pay. Willing defaulter having the ability but not paying, and a fraudulent borrower. How do you sort of distinguish between each of these three?
Right. So maybe I'll want to distinguish between three types of categories of borrowers. One would be someone whom I am maybe approaching for certain documents, or I have been following up and they are not responding for periodic KYC and certain things like that. These are classified as non-cooperative borrowers because they are not cooperating with me. They did not commit any crime. They are not defaulting also, but they're not cooperating with me in terms of the requirements that I'm seeking from them, in spite of giving them repeated reminders. So that is non-cooperative borrower. Next is someone who maybe entered into the borrowing transaction deceitfully. So I would say that if you are submitting wrong statements, wrong documents, the representation that you made while availing the loan that were false, the documents that you have submitted, title documents or your KYC documents that were forged, these are cases wherein you are trying to commit a fraud. You are trying to maybe convey something that is not, you are trying to hide the actual facts or show wrong facts to avail the loan facility. Now, this
But
can be at the time of availing the loan facility. Also, during the loan transaction, there can be instances of fraud being committed by the borrower. This is actually a criminal activity, and it may be detected not just at the time of granting the loan, because if it is detected at the time of granting the loan, then maybe I'll end up not giving the loan to the borrower. However, these are instances which we may find out after the loan has already been granted, but the fraud was committed much before that. So these kind of situations, I'll classify the borrowers as fraudulent borrowers. Defaulters could be of two kinds. One, yes, normal defaulters. We have borrowers who are defaulting in the loans. That impacts their CIBIL score, that impacts the asset classification. If the borrower has the capacity to pay but is still not paying, that is a willful defaulter. It is not just a defaulter but a willful defaulter, because you have all the capacity to pay, you have the funds. However, you are not paying to, or you're not meeting your obligations under the loan transaction. There could also be a case wherein you are maybe siphoning the funds, or you are not utilizing the funds for the specific purpose for which it was given. That also is a case of willful default. And there are regulations for classification of willful defaulters. Specifically for HFCs, HFCs have that you can say right to identify and classify a willful defaulter. For NBFCs, we still have these in proposal stage. The actual master directions for identification of willful defaulters has not been notified, and once notified, even even NBFCs will have that right.
So therefore, we are therefore saying that the every defaulter is not a willful defaulter, and every willful defaulter is not a fraudster. So fraud
Right.
becomes a, I mean, and I think the meaning of fraud would still come from the Indian contract law, which talks about intention to deceive. The key or critical element in a fraud is intention to deceive. Suppressing some critical information based on which a contract, for example, in this case, the contract of lending is executed, or supplying a wrong fact, intention, once again, with the intent of deceiving. So the intention to deceive and to mislead you to give a loan without, whereas had you known the correct facts, you wouldn't have lent, or inducing you to enter into a loan agreement by suppressing critical information. That's what one would take to be a fraud. You rightly mentioned there could be a fraud at the inception of the loan, that is fraudulently inducing you to lend. But once the loan has been given, then also there could be a fraud, which is fraudulently taking away the collateral, misdealing with the collateral, or siphoning the funds away, etc. All of these will be examples of fraud. Variants of fraud as to what will constitute a fraud, I don't think anyone could ever list out variants of fraud, because every fraudster has tremendous imagination, tremendous capabilities. I've always said the capabilities of a fraudster are far better than any of us. And therefore, a fraudster is far more intelligent person than either Anita Beth or, for that matter, anybody else. However, the common element is intention to deceive. That is the common element. Back to the question, Anita. The master directions require you to have some kind of governance mechanism to deal with frauds. Now, let's say excluding upper layer companies, which are just a handful, but mostly it would be either the lower layer entities, base layer entities of 500 crores and above, or more than 500 crores, or the middle layer entities. What is the regulatory expectation in terms of the governance mechanism? What exactly are supposed to observe in terms of the governance mechanism?
Before answering that question, just one point, since the applicability of these directions are from immediate effect, so we need to first of all make sure that we are placing this particular directions and the actionables that has to be done by the company in the immediately next board meeting, whichever we have, so as to ensure that at the earliest we are able to comply with the obligations that are coming from this. Now, talking about the obligations specifically on the governance part. From the governance aspect, the first and foremost, something which has been common in any new direction that the RBI issues is having a policy on fraud risk management. So we need to draft and adopt a board approved policy for implementing the fraud risk management, which will lay down the measures that we take for prevention, for detection, for monitoring and reporting the fraud cases, the roles and responsibilities of senior management, board, and the committees. All that will be laid in the policy. Also, there has been a concept of early warning signals, which we can discuss separately as well. That framework also will be indicated in the policy. Next, because we started with the trigger point, which was the Supreme Court verdict, there has now been a requirement to issue a show cause notice to the borrower before declaring the account as fraudulent. So I have to issue a show cause notice and give the borrower an opportunity of not less than 21 days to respond to the show cause notice. Then, based on the submissions, I need to have a well laid out system wherein I'll examine the responses submitted by the borrower, and then a reasoned order has to be The RBI has used the word reasoned order, which means that yes, whatever submissions have been given, whatever were the allegations, all of it are being examined thoroughly, and then you are coming to a conclusion that yes, it is declared or classified as a fraudulent borrower. So that reasoned order will be given. There has been a committee formation requirement. This is the third requirement under corporate governance, wherein you need to have a board level committee. However, for middle layer and base layer entities, the committee can be an executive level committee as well. That needs to be constituted. What is the role of this committee? They will actually ensure the effectiveness of the entire fraud risk management framework that is adopted by the NBFC. So I'll have to review and monitor what all cases were classified as fraud, what was the mechanism that was followed. I'm not actually involved in the actual classification, but the committee's role over here is restricted to overseeing the entire framework that has been implemented for management of fraud risk. Also, there are certain responsibilities that has been laid on the senior management to set up an appropriate organization structure for implementing the FRM. They have to periodically review the frauds incident and maybe take it up to the board if the quantum or the size or the kind of fraud that has occurred it is significant. Then that is what the senior management needs to ensure. Implementation of the early warning system is also a responsibility on the senior management. There are certain kind of transaction wherein legal audit has to be done. If the size of the loan is more than 1 crore, in that case, there is a requirement to conduct the legal audit. So these are the various, I can say, the governance requirements under the master directions.
You talked about the committee of executives, which is charged with the overseeing of the fraud risk management. They are not overseeing the frauds themselves, neither are they involved in protection. I mean, let's say detection of frauds, or they are not taking actions against the fraudsters, but they are overseeing the entire mechanism. Now, this committee of executives will consist of who all? Like, think of, let's say, company which is middle layer entity. Who all will be there in the committee?
Okay. So the RBI has said that there will be minimum 3 members, and one of them has to be a whole-time director or an equivalent position. In case the company has a whole-time director, you will have the WTD as the part of, or an equivalent position based on your own hierarchy at the equivalent position would be considered. Maybe a CEO would be considered as a part of the committee. The other 2 members ideally should be someone who is involved or who will be like a CRO kind of a position, because these are people who are actually also responsible for the other risk that the entity is facing. So they can be a part or a member of this committee.
And you talked about early warning signals, and that's a very interesting word. And the RBI expects that, like banks were earlier required to identify and to develop a system of early warning signals, now NBFCs also are required to have some kind of a data bank, or a base of information for early warning signals. I wish there were early warning signals for lots of things in life. There was early warning signal for death, which doesn't happen. It takes us by surprise. There was an early warning signal for some natural calamities. They also take us. Rains in Bombay, I don't think anyone was taken with prior notice that it would be flooded today. So early warning signals, it's very nice to have, but most of the things happen just take us by surprise. We are like sort of pounded by these calamities, and therefore fraud also likewise. If there was a pattern in fraud, I would probably say, well, I'll probably have early warning signals, but every fraud brings a new pattern. So, what kind of early warning signals do we develop? Where do we get the signals from? I mean, in good, what do you call, Shastras in India included one branch of Shastra called Nimitta Shastra. Nimitta Shastra, or you could probably also call it Shakun Shastra, which dealt with all kinds of superstition, that if following things, if there's a bird speaking to my left, it probably means something. The donkey speaking on my right, it means something. People normally take them as superstition, but there are well-laid shastras dealing with the so-called nimittas, nimitta shastra, sort of early warning signals of something. So is the RBI has some kind of a list of nimittas or shakuns which can tell me this particular borrower circumstances likely a fraudster, or do we have any kind of authentic compilation of early warning signals from anywhere. How do we develop this bank of early warning signals? Any thoughts on that?
Right. Early warning signals, as you mentioned, that yes, unless and until I burn my own hands, I'll maybe learn only by burning my own hands. So,
But the good part of learning is that you learn from others burning of
right,
hands.
right. So
That's
if
all. And if
others are
others have burnt fingers, I know that fire is hot. So
right,
similarly, in case of frauds, also anything that goes wrong anyway, something has happened with me, I'll be at, I'll be in utmost fool if I don't learn from my own mistakes. But I'll also be even bigger fool if I don't learn from mistakes of others.
others.
The idea of early warning signals is learn from your own mistakes, try and introspect and try and see, are there any indicia that were missing that could have been seen but were not seen? Part one. Part two, from the experience of others, are you able to identify any signals? So basically, you're building this data bank over a period of time. You could probably say, with the introspection of people with strong experience in credit business, lending business, if you can pool together the experiences, get 10 people with substantial experience of lending, let's say over time, and ask them to put their thoughts into what could potentially be the indications of a fraud defaulting borrower. Are there indications which could probably be tabulated? That might become one data bank of uh, you know fraudulent borrowers. But do you have any kind of an official data bank of early warning signals?
Yeah, so the RBI had actually issued a illustrative list of signals in 2016 fraud directions that was specifically for banks. For HFCs, there are early warning system framework that is there, and that lays down a significant number of it. But for HFCs, the thing is that it is not just specific to fraud. Even if there is a detection of NPA, so they include both detection of fraud as well as detection of NPA as the various they lay down the various warning signals before detecting a fraud or detecting an NPA.
So basic idea is that let's not be relying on a regulator supplying a list of early warning signals. This is basically learning yourself. It's a process of learning. And I think every organization which is sensible, which has a system of feedback, does its own investigation, develops introspection, gets a field report on what were the indications which could have probably given a prior signal of you're right that whether it's a fraud or a default, the injury is the same. A fraud becomes a criminal action also, but a potential default also burns my PL in exactly in the same way. So I don't necessarily rule out the early warning signals of default and focus only on the EWS for a fraud. But the idea basically is to pool experiences and develop this data bank, whichever way it comes. Now, Anita, you have been consistently talking about housing finance companies through your deliberation. Are you saying that the reporting of frauds by HFCs is the same as in case of NBFCs, or is there a difference?
No, so the reporting in case of HFCs, housing finance companies will have to report to the NHB. There are specific, you can say, guidelines over there. There are reporting requirements, and the reporting for HFCs by HFCs will be done to the NHB.
So tell me, if an NBFC has consistent, I mean, history of frauds. During a year, there are five frauds by different borrowers of substantial sizes which come to notice. What does it indicate? Does it indicate some kind of a lack of internal control? Does it indicate laxity of lending? How does it reflect on the lending policy or lending underwriting standards of the entity in question?
So I
I know
think
it's hard to burn the P&L account, but is it also indicating some way on the internal control or the kind of underwriting standards?
definitely, because if we are seeing a pattern, if we are seeing similar kinds of occurrences of events which are leading or be classified as fraud, in that case, that definitely shows that our internal controls are weak, and we should. The framework is not just about identification, but also about taking the corrective measures. When I say fraud risk management, any risk management is not complete until and unless I learn from the mistakes, from the identification, from the monitoring, and then implement the corrective actions as well. So if there are lapses, there is weakness in the internal controls, that also needs to be you can say rectified and upgraded with the in today's time wherein AI is something that is taking over, and it can be used for more wrong things than good things. In today's time, it becomes important that our systems, our operations, our control management, everything is updated with the kind, because maybe we'll not be ahead of the fraudster, but we are learning from our mistakes, and based on that, we are rectifying and taking those corrective actions.
So you're saying that if I'm hit by a fraud doesn't mean there's anything wrong with me. It's just that I have been victim of a fraud, which is same as saying that if I come under bad weather, I get flu. There's nothing wrong. Well, anyone can get a flu. It's not something which is reflecting on me. But if today I get a flu, tomorrow I get a leg injury, third day I've got a head injury, fourth day I've got a stomach, bad tummy. There's probably something wrong with my immunity or lifestyle too. So same as saying that if it's indicating a lifestyle issue, style of doing business with the NBFC, then of course in a way it's reflecting on internal control too, and therefore the board of directors also in some way have to be responsible, because in the under the Companies Act, one of the directors' responsibilities, and that's very important. RBI doesn't talk about it, but the Companies Act anyway talks. Directors' responsibility statement also includes taking appropriate steps to for prevention of fraud and error. My shareholders should not be suffering because of errors. My shareholders must not be suffering because of frauds as well. So even if the RBI doesn't talk about it, the board of directors still has the ultimate responsibility to take safeguards against frauds as well. Now, in this master direction, sometimes there are references for frauds in group companies as well. Now, what kind of every entity, every NBFC would probably have some group entities too. So, what kind of frauds in what kind of group companies are we referring to, Anita?
Right. So in terms of group entities, there has been an obligation that you need to also report the frauds of unregulated entities in the group. Now, as such, the access of information related to frauds in group companies for the purpose of reporting may only be feasible when the reporting entity has a significant degree of control over such group entities. Now, under the master directions, the definition of group entities, they have included subsidiary, affiliates, and joint venture. We understand subsidiary and joint ventures; these are commonly used. We understand there are definitions how you classify someone as a subsidiary and a joint venture. Affiliate as a term is not defined neither in the RBI regulations or under Ind AS or accounting standards. In our view, this should not be considered as affiliate per se. However, associate entities would be, I think, a better measure, wherein you have certain control, you are having a stake in that company for the purpose of consolidation. You are considering those companies. So maybe having these specified in your policy, that yes, these are my group entities, these are the relation with my group entities who are unregulated, subsidiaries, associate, and JVs, and I then consider them as a part of my reporting obligations as well.
So you're basically saying that I need to be concerned about frauds in the companies which are under my control or my influence, and I'm not as such expected to report frauds which are happening upstream in my controlling entities. That's not something that I need to be reporting. That's good. I have two more questions to ask, and then I think we'll come to a close of this, Anita. Number one, you mentioned about some kind of audit of a fraud involving a sum of rupees 1 crore above. So 1 crore is what, the total amount of damage?
No, it is the loan outstanding value of the loan.
Which is the same as damage, because I've suffered rupees. I mean, the outstanding principal at the time of fraud was 1 crore. Usually speaking, if it's a case of fraud, I think normally the borrower wouldn't have paid anything, because a fraudster wouldn't be foolish enough to pay you a part and then defraud the rest of the loan. But let's assume 1 crore is the total hit caused by the fraud. Now, what kind of audit? Audit by who, and what kind of audit are we talking about?
Now, so the legal audit of the title documents have to be done.
That's different, but you also mentioned about some internal or external audit.
Okay.
Legal audit of title deeds is different. I'll talk about
That's
that
different.
but yeah, sure.
So there are two things. Let me then clarify that. One is the legal audit of the title documents in case of large value loan accounts. Over there, the 1 crore limit has been specified. The second is the requirement wherein I am supposed to have internal or external auditors investigating the fraud. Now, this doesn't mean that I have to appoint a specific auditor for the purpose of investigating the fraud. Usually, there are internal teams who take care of this kind of a function. There is a dedicated team. To the extent they are an independent team, they are dedicatedly working for this. There's no conflict of interest. I don't see a concern wherein an internal team like a risk controlling unit or someone, RCU, can be assigned this responsibility for carrying out the audit of the fraud.
But audit here would mean getting into what was the reason for the fraud, trying to find out what are the causative
Right.
factors, what could have probably been lapses. Idea basically is not to do a forensic check. We are not assuming the role of the criminal police here. We are assuming the role of internal check. And when you say independent, the question is independent of who? Independent of who could be involved in commission
Involved.
of the fraud.
Yes.
For example, a loan is granted by a credit officer, then I should of course not be credit officer doing the check in the fraud, because then the involvement of parties could never be detected. Then you talked about the legal audit. That's what you said, legal audit of the title deeds, meaning are the securities still in good shape? Are the securities still existing? Does it mean a physical verification of securities or just a checking of the title deeds?
So title deeds, if I'm doing a legal audit, it is not just restricted to reviewing the documents, but also verifying the authenticity of those documents. So in that case, to the extent if the person who is conducting that legal audit will have to determine what are the various ways in which it is satisfying itself of the authenticity of those documents, that the collateral is still valid and can be enforced.
I mean, if the document was valid last year, it cannot become invalid this year. So I don't think validity is something which changes year by year. But probably the intent of the RBI is to ensure that, well, subsequent to grant of the loan, the borrower has not done some kind of encumbrance,
Transfer.
hasn't created some kind of barriers. Idea basically is that is this secure? It's not title deed alone, but
No.
the collateral behind the title deed is it still valid and enforceable
Right.
in terms of my right. The whole idea is not to check this. I mean, there's not no point will be served by seeing the same title deed over and over again in every year. The idea basically is to see the security represented by the title deed still remains good and enforceable.
In a way,
And
validity of the security created, that is something that needs to be ensured.
so we are not getting into valuation exercise here. It
No.
is legal audit, not valuation check. So legally, is my right still good and solid?
Right.
Final point is, when do we say the fraud can now be closed? It's a reported fraud which can now be closed. So what is the closure of the fraud?
So, for closing the fraud, you need to ensure that the actions are complete. And if there were legal cases that were filed against the borrower, all of that has been closed. Only then you can say that the fraud has been closed. If there was any staff who was involved, that staff accountability also must be complete. In certain specific cases, RBI has allowed to close the account even if the cases are pending. If the amount is more than 25 lakhs and the investigation has been pending for more than 3 years from the filing of the charge sheet, the investigation is still pending, or the charge sheet was filed but the trial in the court has not commenced for a period of more than 3 years. In those specific cases, since the RBI has allowed the NBFCs to close those cases in these circumstances.
Excellent. And Anita, I'm not asking you to give details of the forms to be filed, but that's something which is more like a readable information. And anyone who's interested can probably go to your website and check your write up on the fraud risk management to see what reporting is required. With this, Anita, time to thank you for giving such excellent guidance on fraud risk management. I'm hoping there'll be less of risk on account of frauds with the help that you've given. And let everyone stay safe and stay free from frauds. But if people have questions, because most of our audience are people from compliance side, if people have any questions on what exactly should I be responding, what way should I be responding to frauds, still have questions which have not been answered during this the conversation, please feel free to post your questions by way of comments either on our YouTube page or on our website page. And wherever possible, we try to come back with answers on questions which are of generic and academic interest. Thank you very much for watching, and thank you. Thanks, Anita. Bye bye.
Thank you. Thank you, everyone.